Hello traders, Gary Wagner with the Gold Forecast here. It is Tuesday, approximately 9 o'clock here in Honolulu, Hawaii. It is December the 7th, and this is the Daily Report. Gold currently trading under pressure, trading at 1409, 1410. It is due to predominant selling today. A strengthening U.S. dollar is putting it off about $2.10. And gold price change due to selling down about $11, putting it down about $13 on the day today. It has been as low as down about 20. And what I believe we are witnessing right now is literally profit taking after the market has hit a new high. If we take a look at the prior high right in here, we can absolutely see that we have taken that out. And because of that, we are seeing a round of profit taking. In terms of a candlestick pattern, this two-day pattern right in here is what is known as an engulfing bearish. An engulfing bearish is a reversal indicator, as it is a sell signal, but it is a sell signal only based on what is called confirmation. What that means is that if we have follow through selling on the following day and we got a candle that looks to say something like this, of course in the Forex it would have to equal the close, then that could indicate that we've hit a possible top and that the market's going to come down. However, we have seen the market have these types of patterns and then move back up. We got that right in here, for example, where we had an engulfing bearish and the market came up, but here we got an engulfing bearish at the top. Again, you'll see them throughout the market, and about 50% of the time we are getting that follow through, and when we do, we could be witnessing a market top. It's a little bit too early to tell. But on today's report, the one thing that I am going to recommend is that we trail our stops up and that those stops are trailed to 1395. So traders, I am recommending that we move our stop to 1395, and that is on a protective stop, and that should hold us in, and that should give us a little bit of protection. Now, the next thing that I do want to look at is I want to, of course, change this chart into our Henkin chart so we can take a look and see how it's looking in terms of the average chart, the Japanese average chart. Traders, especially on days like today, you can see how different the Henkin chart is from the standard candlestick chart. Whereas in the candlestick chart, we obviously had a strong indication of that sell signal with that engulfing bearish pattern. But what we are noticing here is the first formation right there of a tail. That's the first thing that you'll want to look at. The second thing we want to look at to see if the trend is weakening is the size of the body, and we can see there's no doubt here that the body length is getting smaller. But this is why I like the Henkin chart. Excuse me, where I would react a little bit more stringently and strongly just based on a bar candlestick chart. When we look at the Henkin chart, as you can see, we do not have a full-blown sell signal, and in fact right now it does look like the trend is intact. However, what we do want to take a look at is at these tops, the way the Henkin chart will react is you will get that one day in which you'll see that tail form, and it happened here also. We're getting that. And then on the following day, we'll get a very small-bodied candle. If we get that tomorrow, we're probably going to recommend that we go in and simply pull profits, see where the market wants to go, and look for another trade on another day. Traders, the last chart that I do want to look at today is our channel chart, which is our 240-minute candlestick chart. I've put it up here. And as you can see, whereas we were tracking really, really well right in between these two channels here, you can see that last night we had this major breakout to the upside. It gave us our new high, But as soon as we got that new high, of course, we had a major round of profit taking coming into the market. When we got that round of profit taking, of course, the market sold off, which it has. Here's that low that it hit. And I want you to see that low tends to match really, really well right here at a 50% Fibonacci retracement level. And these are our stagnant or stationary levels, but at least tentatively, and I underline the word tentatively because we're still trading here, it looks like it's going to fall back into this channel here. Looks like it found some support, so that if it does find support, I would look for it to, as we saw it trading in a very, very light channel here, it broke up. I would look for it to come down and possibly trade either in this or to this channel here, and then begin to, if we're going to continue our upward path, kind of track like this and then go to our new highs. That's really what I would be looking at. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.